You can't control what the future holds, but you can take control of your investments with principle. Whether your goal is to enjoy a comfortable retirement or to secure your financial legacy for future generations. After all, your future and aspirations are worth investing in. That's why we offer a wide range of fund options that gives you global and local exposure for better returns. With more than 142 years of global investment experience at your fingertips, you can take full advantage of opportunities to build your wealth. And we make it easier for you to manage your investments with our enhanced digital solutions. Now you can easily buy, redeem and switch your investments at your own convenience with our easy-to-use online investment portal. Never miss the right opportunities to invest with cash or iInvest. As you build your legacy and aspirations, we will be by your side to help you secure the future for you and your loved ones. Start taking control of your investments with Principle today.
Hi, good evening everyone. I hope you guys are all okay. Thank you so much for being here with us in our Kopi Chat session. My name is Farah, your host for today, and together with me I have
John. Hi.
Yes, and tonight our special guest is Jay.
Hi. Thank you for having me. It's a great pleasure to be here.
Okay, so tonight Jay will be sharing with us his point of view on the special topic on preserving your capital in a period of volatility and uncertainties.
Yes, that's right. So whether it's possible or not, we will discover it during this live session. So please stay tuned. So Farah, I think the last time we did it was probably a month ago.
A month ago,
right?
yes.
So I heard you went on vacation.
Oh,
Where
where
did you go?
Good break. I went for an island beach vacation.
That's
and
nice.
I know you went there too with a little bit of experience, fun experience, right?
Yes, completely opposite from you. So I actually went to a city vacation, right? So actually, I want to share a very, to me it's interesting, okay? So remember, I think about 2-3 Kopi chat sessions ago, right? So you spoke about the difference in
ordering coffee,
right?
In Malaysia,
Malaysians versus your Western friends. So I actually had the experience. So I ordered coffee, at this place overseas. I wanted an Americano. So the waiter was like, he asked me, he said, do you want white or black Americano? And I thought it was very, a bit strange to get that kind of question.
Americano is black
correct,
coffee?
right?
Yeah.
I always
I
assume
thought.
that it's always like, black coffee, but I haven't got asked that question. So I actually thought that I couldn't understand his accent or something. But then I was like, okay, just black coffee then.
Right.
Then I went back to do some research. So, what I discovered, this is what I discovered. So, but before I share what I discovered, right? So can I ask you both, right? So what's, in your point of view, what first comes to mind when I mention white Americano or versus a flat white? So what can you?
I would say it's kopi susu lah.
Yeah, I would think so
Right?
as well.
Right.
A black coffee with milk.
Okay,
Yeah.
so white Americano is basically Americano with milk. It can be, it's just
Hot or cold?
random milk just poured into your coffee, But a flat white, so flat white is basically a shot of espresso with steamed milk.
Oh.
Yeah.
So flat white is hot. Always hot?
Always
because it's
hot.
steamed milk?
Steamed milk.
Got it.
Right?
Right.
So white Americano, it's a little bit warm, I would say.
Oh, that's nice.
Yeah.
Okay.
That's nice.
So as per the as per our usual Kopi Chat sessions, right? We actually have trivia questions.
Yes, we
that
do.
we prepared, right? That Farah prepared. So Farah, you want to tell the
Yes.
audience
Okay,
what's the differences tonight?
we will have a slight tweak. Basically, usually we will get John and our guest or myself to answer the question, right? Well, they still going to have to they still have to answer the trivia question, but what's special tonight is that we're going to reward the audience, okay, if they answer the trivia correctly. So John, would you like to share with them?
Yes, so the reward is RM 10 ringgit coffee voucher. So join in the trivia, be the first person to answer correctly, and you will get RM 10 ringgit
Yes.
coffee voucher. So I will do the
Okay.
winner picking.
Yes.
So I will let you guys know.
But you have to
who
answer
won.
first.
Yes, I will
Okay?
answer.
All right.
Right.
Okay, so our first trivia. So what is espresso literally means? A, speed it up. B, to go. C, forced out. And D, black and intense. What is espresso literally means? Come on.
A. I'm guessing.
Guess, Jay, guess.
A, A is speed it up, right?
Speed it up. Okay. Do we have any answer from our audience?
Okay, I would say, well, D, black and intense.
Black and intense. Okay. Let's see whether we have any answer
Okay.
from our
Any answer?
audience.
No answer? Oh,
Okay.
what? Oh, okay. Right. So
Okay.
we apparently we have one answer in the audience, but it's actually the wrong one, right? I assume it's the wrong one.
Yeah.
Okay, what's the
Okay.
answer, Farah?
So the answer is actually, none of you actually got it right. It's C, forced out.
Forced out.
Forced out.
Forced out.
Okay.
So basically, in Italian, the word espresso literally means when something is forced out. And by the
Okay.
way, the pronunciation, right, it's not espresso, it's espresso.
Espresso.
Okay?
Espresso.
Yes, not espresso. All right.
All right. So, but do stay tuned. We have
Yep.
2 more trivia questions. So please
Yeah.
join in
Stay
if you know
tuned.
the answers. So just comment, and we will reward you with RM 10 ringgit coffee
Yes.
voucher if you answer correctly.
Mm-hmm.
So okay. So let's dive into the topic tonight, right? So.
Mm-hmm.
Did you know some of the wealthy investors, right, basically pay themselves first? So meaning that whatever they receive, right, in terms of cash, they would always set it aside and invest without having any need to withdraw any of the funds, right? So my question to both of you all, in your opinion, right, what are the qualities, what qualities from the following are the most important when it comes to investing? So whether it's having sort of an understanding of the current market condition, or whether it's basically that discipline to stay invested, right? Or are both these points equally as important?
So, is this question applicable for conservative or a non-risk taker investor like me? Or perhaps, Jay would be able to give us
Yeah.
a point of view. Yeah.
Yeah, so just from my point of view, I think staying up to date with the markets is certainly important, especially if you're actively managing your own investments, right? But here's the thing, not everyone has the time or the privilege to actually do it. And people may be busy with their own work schedules or their other commitments. But that being said, that doesn't mean that these people will not be able to build their wealth over the long term. So just to answer your question, I think what is really important for investors, it's mainly the discipline to manage their own finances. And so there's also this 60-20-20 budgeting rule, right? Which our CEO, Puan Munira, recently highlighted.
I think we covered that as well in the previous Kopi Chat
Yes,
session, right?
yes.
So
And for those who actually missed this, they can always go back to Facebook and watch our Borak-Borak Bersama Fizo. Yeah.
So yeah, sorry.
Yeah, so basically that rule it goes on to say that one should set aside 60% of their gross income towards their daily expenses and essentials. Then another 20% will be for your emergency savings, and the remaining last 20% would be for your investments. Now, for your investments, how you want to manage it is really up to you, right? So you can choose to do it by yourself. You can invest it personally by directly buying your own stocks and bonds. Or alternatively, what you can do is you can also choose to invest it in a unit trust or a PRS scheme. And that's where principle can really help you to plan for your financial and your retirement goals, especially if you don't have the time to do it by yourself.
Right. Okay, so we look at a couple of approaches from wealthy investors, right? So one particularly stood out, as we all know, Warren Buffett, right?
Yeah.
So his rule of investing is basically, rule number 1 is never lose money. Rule number 2 is don't forget rule number 1. So as you know, it's very hard to keep up with this, especially in this current market condition, right?
Yeah.
So, and also as investors as well, it's inevitable that we actually experience losses throughout our investment journey. So my question to you, right, is that how can one manage this?
So yes, I totally understand from your point of view. I totally hear you. I think this point that you have just raised is made even more relevant, especially with the challenging market that we have had this year, right? And now, if you had followed the traditional 60 to 40 stocks to bond allocation rule, chances are it's very likely you'll still be in the red this year, right? Okay. And in today's market environment, I think it's really important for investors to actually preserve their wealth, especially with the heightened volatilities in the market and also the rising uncertainties in the global economy.
Right.
Right. So and that is where money market funds actually come into play, right? Because these investments have still been able to generate positive returns this year, even with all the turmoils in the market that we've seen. So I think it's something that is really worth for investors to consider to have these money market funds into their investment mix.
Okay.
Right.
Okay. So the next question is, so for the benefits of our audience, right? So what exactly is money market?
Okay, so before I take on that question, just out of curiosity, right? And perhaps we can also open this up to the audience, where the audience can just leave their comments, their views in the comments.
Yeah.
And I would like to ask the both of you as well.
Ask Farah first.
Yeah. So what exactly comes to your mind, right, when you hear the word money markets?
I only hear money floating in the market.
Okay, so for me, it's like a marketplace filled with money around, So that's what I would think what money market fund is.
Actually, that's how it gets its name, right?
Yeah.
Yeah,
But can you tell us in your professional point of view what exactly is money market?
So that's a really good guess, I would say. And so just from my point of view, I think what the money markets, it's similar to the capital markets, where it acts as an avenue for people or institutions with surplus or excess of funds, right, to actually lend it out and invest with the people who are actually short of funds. They need funding requirements, okay? And the reason for the term money in the money markets is mainly because the assets that are traded in the money markets, they are easily convertible to cash. So that means these assets are highly liquid.
Okay.
Yeah.
Okay.
Okay. So before we proceed with question number 4, let's go into our Kopi trivia again.
Okay. So
Okay.
here's where you comment your any answer, and if you are correct, you win RM 10 ringgit coffee voucher. So kick it off.
This is very easy, okay? So Kopi Luwak is the world's most expensive coffee. It can go up to about $600. So A, what is Kopi Luwak? Processed during a full moon. B, brewed only with solid gold parts. C, made from coffee beans eaten and then excreted by a Sumatran wildcat. Or D, grown at a higher altitude than any other bean.
Definitely C lah.
See lah.
Sila. What about our audience? Anybody answer?
Any audience got the correct answer? No? Oh, okay.
Oh, okay.
That's a
Yes,
shame.
you guys
It's
are
okay.
right. So the answer is C.
Right, C.
Okay.
Okay.
Yes. Okay, let's proceed now
To
with
the next one. So we have one more last trivia, so
Yes.
stay tuned. Yeah. Okay, the next question.
Okay, I will continue
you
with
will
the
take it?
question, yeah? Yes. Okay, so Jay, so what are the key differences between the money market instrument and fixed income or bonds?
Okay, so first of all, I think it's important to highlight that money market instruments also include short-term bonds, right? So these money market instruments and short-term and bonds, they are both essentially debt instruments where the lender can actually earn a fixed return by lending to the borrower, right? So now one might be wondering, what is a bond, right? So bond, actually, it's quite simple. It's just a financial contract to represent a loan between the borrower and the lender, right? And this contract is actually legally binding. That in the sense that if the borrower actually defaults on his obligation to repay the lender,
Okay.
the lender can then, the lender basically has a legal right to take charge of the borrower's assets,
Okay.
and then the lender will basically liquidate those assets to recover a portion of that principal that he has lent to the borrower, right?
Okay, yeah.
Okay.
So I think for the benefit of the audience, I think some of you may probably be a new investor and may not be familiar with the bond, right?
Yeah.
So what we can perhaps do is to do a little demonstration.
Yay.
Okay, very
Let's
exciting.
do it.
Let's do it.
Yeah.
Yeah, to just show how it works, right?
Okay. Tell us.
Okay. So just assume that I'm a small company
Okay.
that manufactures sports apparel and footwear,
Okay.
Okay.
and I need $100 today. I need to borrow $100 today
Okay.
to fund my little small project, right?
Okay.
And just say, so happens Farah has that extra $100 that she's actually looking to lend out and to invest that money, right? And so here she is studying my proposal. She
Okay.
will then have to assess my credit worthiness. So what is credit worthiness? It's basically my ability and my willingness to pay that $100 back to the lender at the end of the tenure of that loan, right?
Check.
Check. So assuming Farah has already done the studies and she's happy with it,
Okay.
and she's willing to lend me that $100,
Okay.
and now she's actually willing to lend it out for a 5% rate, okay?
Okay.
So what we can do here, remember how I mentioned the bond is a financial contract, so I have a little piece of contract that I've just written over here, so I'm not sure if it's big enough, you can see. So basically this is a bond. You have a $100 par value that pays off in 1 year. You can redeem it from me from 1 year, and you have this $5 coupon, right? So here I have this bond, and I need the money, so I'll sell it to Farah.
Sell it to Farah.
Okay. Here you go, Jay.
Wow, magically you have 100 ringgit.
I have
lying
100
there.
ringgit
Wow.
lying here. There you go.
Yep.
And I
Okay.
have the bond.
So
okay.
now I have my money, okay, to fund my little small project, and Farah now she owns this bond,
Okay.
and assuming she holds this bond to maturity, which is
Okay.
1 year from now, she would then okay, just say she holds it for now.
Okay.
And 1 year from now, my project, just say it so happens to be successful
Okay.
and it is profitable. So after 1 year, Farah will come back to me and she will return this bond back to me. I will redeem this bond back from her.
Okay.
And I will then, if you see the $5 coupon here, I'll basically have to pay her $100 her principal, and she has earned that extra $5 as her interest.
Yay! So I
Okay.
have 105.
So that's scenario 1.
That is scenario 1.
Okay.
So this is basically the basics of how a bond works, right?
Okay.
Okay, so now in the next scenario, I would like to also demonstrate how these bonds are actually tradable and how these bonds are actually liquid as well. So in this next scenario, let's assume the same case again, where I'm a small company.
Okay.
I need to fund my project, and Farah so happens to have
Okay.
that $100 with her again, looking to invest for a 5% rate, right? So now again, Farah, I'm selling this bond to you.
Here's your money.
I get my funding, my $100.
Yay.
But just say, here's where I twist the story a bit. Just say after Farah has lent that money to me for that $100, she is in sudden need of funds, right? Because perhaps maybe there's something that's broken in the house. She needs to fix something.
Leaking.
Yeah, it's like a house leakage, and she has to pay her contractor. But the thing is, she has already lent that $100 to me now, and she will only get it back from me a year from now, right? So, and let's assume that John happens to be a participant in the bond markets.
Okay.
So what can Farah do, right, to basically get that money? And assuming John also has an extra $100, who is also looking to invest at the same 5% rate, right? So what can Farah do, and what would John do? Yeah.
So I sell the bond.
Yeah, precisely. So
Money.
Farah
I take
takes
from
Do you
you
want
lah.
to know? Yes.
Right.
I have this bond.
Anything. So,
It's
but
100 ringgit.
I sell you.
no. So you're gonna buy that bond from Farah.
Okay.
Farah will sell
100,
that bond.
yeah.
Sell
Yes.
that bond to you for
Yes.
But
$100.
okay.
after 1 year,
So the thing is, Farah around has $100, right? That shows that the bond is actually liquid and tradable.
Yeah.
okay, liquid and
So she
tradable.
doesn't have to wait for that 1 year to mature.
Get back the money.
Yeah,
Yeah.
to get back the money. And for John, after 1 year, what will happen is he will then come to me. So he will get me
I
to
need my
redeem
money,
the
Jay.
bond,
Okay.
and I will give him back
Sabar.
$100 principal
Okay.
plus the $5 interest, right?
All right, thank you so much.
Okay.
Yes. So it's
So
a
we're
win-win
both
situation
happy.
for all because
Yes.
I get my funding to fund
Yep.
my little small project. Farah, although she has bought the bond initially, but she is in sudden need of funds and she will have to sell it. And because of its liquidity, she has managed to raise that $100 by selling that bond to John.
Yeah.
Okay.
And for John, he has also met his investment objective of that 5% that he
5%.
wants to earn on that $100 within a
Right.
year from now, right?
Yeah.
And
Fantastic.
the last scenario I would like to also demonstrate to everyone is the relationship between the price and yield of a bond, right? So as people might be aware, the price and yield is actually inverse, right? The relationship is inverse, where if the yield of the bond goes up, the price of the bond goes down.
Yep.
And if the yield goes down, price goes up. So why is that the case? Okay, so let me try to show it with this demonstration again.
Do you have your bond paper?
Yeah, I need my bond paper back.
No, you have
No,
it.
Where is it? Oh, right here. Okay. Confused. Okay. So what's happening here is, again, I'm a small company. I need my $100. So I will then lend it out. Sorry, I will then sell this bond to Farah again, right?
Okay.
So I need my $100.
Oops.
Yeah.
Yeah. Okay.
Okay. So now just say she has lent me that $100, and in the same case again, Farah so happens to have emergency need.
Roof leakage.
Roof leakage again, and she now needs to sell that bond, right? And John happens to be a market participant. And
Okay.
here is where I would change the story again. Just imagine right after you bought my bond, right? There's a market news. There's a market news that that comes out to say that my little small factory, I'm running with some my machinery is like malfunction, for example. Okay. And now, as you want to sell your bond to John, now
I have to tell him this news,
correct,
right?
Correct.
Yeah.
My question to John, after being aware of this news, would you still want a 5% rate for that bond?
No, okay, let's say assuming if I want to buy it, I want a 10%.
Yeah, okay. Now,
Right.
yeah, because it's a higher risk, right?
Correct. Yeah.
The chances of me repaying is actually lower in that way, right? The
Yeah.
credit risk is higher, right?
Correct.
So you want a higher rate to compensate for this
Yup.
higher risk, right?
Okay.
So now, the thing is, the bond that Farah is holding, it only pays you $5 coupon at the end of 1 year. And you want a 10% rate. Where are you going to get that extra $5?
I buy it from her for 95 instead of 100.
Precisely.
Right?
So yeah.
Do I have to accept it?
So
So
no choice.
Yeah. So
Yes,
for example, in this
I'm
case,
desperate for the money.
so yeah, just to demonstrate again. So
Okay.
if John wants a higher return on the bond, John would then have to pay lower. So you see the relationship, right? The yield is higher, 10% yield that John wants. He would have to pay around $95 for that bond, right?
Yep.
So in this case,
I sell it to you for 95.
you will sell it
Thank you very much.
Alright.
$95.
Okay.
Thanks.
And John now owns that bond.
Good luck with the
And just
house.
say after a year, I so happen to pull through and I managed to get my money from my little project, right? So John would then come to me and he would
And give it
ask
back.
me to redeem the bond, and I will pay him $100 plus his $5 coupon, right?
Okay.
And now, John, what's your profit? You paid $95 and now you're getting
10
$105. So yeah, you're
Yeah.
So I get
so
10.
getting, yeah, correct, precisely.
Right.
So it's $10, yeah.
Yeah.
So your return is just slightly over 10% in this case.
Okay.
So yeah, that's basically how it works.
How
out.
it- okay.
Yeah.
Well, thanks for sharing that. I think
Yeah.
it's very interactive and also informative, right? So I think, Farah, you have the next question, right? Which is question number 5.
Yes.
Right?
Okay. So from the demonstration, right? So what makes the money market liquid? So liquid.
Okay,
So
so
liquid.
money
Yes.
markets, why they are so liquid, right? There are two main features. The first of all, it's the credit risk is typically quite low, meaning to say, typically the borrowers that are in these money markets, right, they have a very strong credit quality, and that means they have a very low risk of defaulting. And like I mentioned, the other second feature that makes it so liquid is because these money market instruments, they are typically short-term in nature, and the term to maturity, it ranges typically from 1 day to 1 year. And because of the short term, the risk is also considered lower. So lower risk also means that you are highly likely to redeem your investments at the original value, plus a slight return from your interest or your profit, also called profit in Islamic terms. Yeah.
Okay, so I have the next question, right? So question number 6, right? So what are money market funds, and what are the kinds of money market funds that Principal offer to investors?
Okay, sure. So money market funds is basically a type of investment fund that invests only in short-term debt securities, money market instruments, and also placements in your short-term deposits. Now, these funds are regulated by the Securities Commission, and the SC basically requires these funds to basically have a control on the tenor of investments that they make, and also the credit quality.
So it's all money market funds?
Correct,
Right.
correct.
Okay.
Okay.
And because of these requirements that are set out by the Securities Commission, this basically makes the money market funds a relatively safe investment.
Okay.
Yeah.
Right.
So over in Principal, just to answer your second question, right? We basically have two kinds of money market funds. At the very basic, we have the deposit and the cash funds. And these funds, what they do is they primarily make placements in your short-term deposits, and they are used by investors as an alternative to placing directly in the banks.
Okay.
So a good example of this fund would be our Principal eCash fund, and that is available on the Touch and Go app under the Go Plus.
Right. Okay.
And the second fund that I would also like to highlight is the money market funds that also invest in short-term bonds and other money market instruments, right? And these funds, they typically provide a better return, an additional return on top of your normal basic cash funds. And a good example of this fund would be our Principal Islamic Money Market Fund, the Class D, and that's also available on the Touch and Go app under the Go Invest.
Yeah.
Right.
Yeah.
Right.
Yeah.
So I think that's really good examples, right? And I
Yes,
think
it is.
you mentioned the benefits about investing in money market funds. So things like liquidity, right? So my next question is, what are the other benefits apart from liquidity, right? Of investing in money market funds?
Yep. Okay, so before we go into that, let's just take a look at how a normal investor places or manages their money, right? So we're talking about conservative investors over here, right? That perhaps they may shy away from your stocks and bonds because they may not be familiar with these asset classes. So what they will typically do is they will typically place their money in short-term placements with a bank, right? A fixed deposit placements, right? And how they will do it is they will not place one lump sum in one particular tenor. Why? Because if they were to uplift, then there will be a considerable amount of interest loss, right? So what they would do is instead they would then break down these monies into many smaller contracts. So when they have to uplift, in case they need money, the interest loss will be minimal.
Okay.
Right? So just to answer your questions now on the benefits of a money market fund, right? So the money market fund, one of the key benefit is it is convenient. It's convenient, right? Because when you buy this money market fund, you're just buying that fund itself with just say with a minimum amount of 10 ringgit, as opposed to you needing to break down your contracts into so many smaller contracts, right?
Yeah.
So that's a lot of hassle and it's a lot of trouble, right? So with this money market fund, it offers you the convenience because you don't have to do that. Number two would be liquidity. Liquidity in the sense that you can always withdraw your money at any time without having to worry about interest loss. We talked about interest loss if there's any upliftment, right? And the third point is also it's a low minimum investment, because with fixed deposits, normally when you place it with a bank, the minimum amount is typically around 1,000 ringgit, 5,000 ringgit, or I've also
Even
seen as
more,
high.
right?
Yeah, I've also seen it as high as 10,000 ringgit. So with this, for example, with the eCash fund that we have, the minimum investment is only 10 ringgit.
Yes.
So it's very good for investors to have this much smaller minimum investment amount. And the fourth point that I will also say is a benefit of our money market fund is this fund is actually managed professionally by our team, the principal team, where we help to manage the duration risk of the fund, right?
Okay.
And now we also have the other money market fund, which primarily invests in short-term bonds, right? And the advantage of this is you can have access to the bond markets with as low as 10 ringgit, right? Remember earlier I mentioned, I think the bond markets, it's okay, basically bond markets, they are only available right now to the wholesale market. Retail investors can also participate in it, but they need quite a large amount of 250,000 ringgit to participate in this.
Okay.
So with the money market funds that invest in short-term bonds, you can easily have exposure to these bonds with as low as 10 ringgit, right? So you have access to this. And number two is convenience and diversification, where when you buy the money market fund, you are exposed to so many different bonds. And so basically you're not putting all your eggs in one basket, right? As compared to if you just buy one bond, you're just exposed to that borrower. Whereas when you buy the fund, you're exposed to so many different bonds.
So it's diversification.
Yes, correct.
Yeah.
And last but not least, of course, the fund is also liquid, and where you can withdraw your investments at any time.
Okay.
Yeah.
It's so liquid.
Yeah.
So liquid.
So liquid.
So we actually have one more question, but I believe, Farah, you have one more last coffee trivia question, right?
Yes,
for the night.
yes.
So let's hear it.
Okay, it's a true or false question.
Okay, true or false?
True or false question, yeah? Okay. Who discovered coffee?
Oh.
Okay. So it says here, coffee was discovered by a goat herder. True or false? True or false?
I don't know. False.
What about you, Jay?
True is a totally random guess. I wouldn't know, but true. I'm just gonna guess.
Okay. So let me just share with you all all the way back in 1500s, it was said that a goat herder in Ethiopia discovered coffee after observing strange behavior in his goats. So he noticed that after they ate coffee cherries, that's where the beans is, right? They suddenly had a lot of energy and were unable to sleep at night.
So it's true.
So it's true. So it's goat herder coming from a non-coffee drinker,
Okay.
John.
Okay. So we don't have any right answers, right? But it's
Yeah,
okay. Don't worry
that's
about
all
that.
right.
Well, y'all just didn't win 30 ringgit.
Uh-huh.
Coffee voucher.
Yes,
Stay tuned for the next one. Okay.
Okay.
The last question that I have for you, right, Jay? So, how can money market fund help in times of uncertainty? So, going back to our topic about preserving
Yeah,
wealth,
so
right?
this basically goes back to the topic of the day, right?
Yeah.
This whole conversation. So, I think, don't get me wrong, right? Over the long term, stocks and bonds are still expected to provide better expected returns compared to your money market funds, right? But the thing is, inflation has been persistently high, right?
Yeah.
And central banks globally have also been tightening their monetary
Yeah.
policies, and this has come at a pace which is much more aggressive than what the market has expected, right? And this basically has caused the negative correlation between your equity and your bond prices to break. And because of that, both these asset classes are down year to date, right?
Yeah.
So no matter where you put your money, whether is it be it in stocks or bonds, you're going to lose money this year, right? So just for example, if you look at the US S&P, it's already down by about 25%, close to 25%. Your KLCI is down by about 11%. Bond returns have also been have also taken a hit globally, with the Bloomberg Global Aggregate Index down by about 20%. Malaysian bonds have surprisingly been more resilient, with the index down by 2%, but nevertheless it's still a loss, right? It's still red. But there's one area that I would like to point out, and one area actually stood out within the ringgit bond index, and that is actually the short-term bonds, right? So if you look at the 3 months to 1 year part of the index, the ringgit bond index is actually up by about 1.2%. And if you look at the corporates, the short-term corporate bonds, that is actually up by about 1.8% this year. So this basically shows how resilient this part of the bond markets can be, the short-term part of the bond markets. And this is despite all the turmoil that we have seen in the financial markets. So I think with the markets still expected to remain quite challenging for the foreseeable future, especially with the rate hikes in the US and the developed markets gathering more momentum, and the odds of a recession has also increased, right?
Yeah.
So I think what would be good is investors also should consider these money market funds into their investment mix as a temporary place for them to take shelter.
Okay.
Okay.
So
Yeah.
thanks, Jay. I think we have 2 questions from the audience, right? So I think probably we can address. You want to address these 2 questions?
Yeah.
Yeah.
So
Okay.
maybe Farah, you want to read out?
Okay, so the question is, so you shared about how money market can offer stability, but is there any catch we need to be aware of that could affect the stability? Example, like duration exposure issuers, or all of them would usually look the same as long as it is categorized under money market fund?
Okay, so that is actually a good question, because not all money market funds are the same. I think if you were to be more prudent, you would really have to study those funds and study the exposures that this fund manager or fund management company has taken for this fund, right? So, like what the question has rightly pointed out, there's exposure to the issuers. So you really need to study whether these issuers are okay. But rest be assured, we have a strong credit team internally that actually assess the credit worthiness of all these issuers before we actually decide to buy that bond for the money market funds.
Okay.
Yeah.
So that's another question.
So the next question, right, from Muhammad Rafiq. So how does OPR affect performance of bond?
Okay, so the OPR is the overnight policy rate that is determined by Bank Negara at each of their MPC meetings, right? Their Monetary Policy Committee meetings. That's also a good question. So typically, like how we demonstrated earlier, remember the relationship between price and yield is inverse, right? So when the yield goes up, what happens to the price of the bond?
Down.
Right?
Go down,
right?
yeah.
Yeah. So in this case, if the OPR is hiked by Bank Negara, that could affect the fund's net asset value by a minimal amount. It could drop. The bond price could drop because of the interest rate hikes. But that being said, remember the risk, the duration risk of these money market funds is low, right, as compared to the longer term bonds. And that's why when I highlighted earlier, bonds this year have generally taken a hit. But if you look at the short term bonds, they are still up year to date. The reason for that is, despite all the OPR increases that we have had this year, the reason why the short term bonds is still up is because the duration risk is low. So the impact of these OPR hikes to the overall NAV value of the fund is actually quite minimal. So yes, it's true that with OPR hikes, there will be some marginal negative impact to the bond prices in the short-term bonds and into the money market funds.
Okay.
But that being said, it's very marginal, and over the long term, it will still be able to generate a good positive return for the fund.
Okay.
Okay.
So thanks, Jay. I think we've come to the end of the session, right? So thanks for your time. Any sort of last comments or words for our audience before we close off the session?
Yeah, so basically, I think there are two main investment propositions for the money market funds, right? So I just want to highlight again, for long-term investors that typically invest in stocks and bonds, they can also consider money markets as a temporary shelter, especially when things are getting more uncertain, right? So just treat it as a temporary shelter for you to park amidst all this volatility in the markets. And the second proposition would be for conservative investors out there, that may shy away from your typical stocks and bonds. Instead of just placing it in your bank deposits, what you can do is you can actually put it into your money market funds to have a more productive returns for your overall investments.
Right.
Yeah.
Okay.
So
So before, thank you so much, Jay. So before we end our session for tonight, for those of you out there who have not followed or liked our Facebook, please do so. So it's where you can find all the information on investment and also our next Kopi Chat session.
So again, just want to remind everyone, right? So whatever Jay has spoken about regarding the money market fund, just to remind everyone who wants to explore investing in these funds can do so through the Touch and Go e-wallets app through Go Plus, which is our principal e-cash fund is available there, or Go Invest, which is our principal Islamic money market fund, is available on there, and everything you can invest with as low as RM10 ringgit. But through Go Invest, you actually can create goals and all those fun things that you can actually do.
And
right?
returns are also higher.
Trade, how many percent?
Right now, we have a gross return of about 3%.
Nice.
Okay.
Yeah.
All right.
Yeah.
I think my investment is making some
Yes,
returns.
me too.
I'm not going to say how much, but yes, some. So yes, thank you again, and just once again to everyone in the audience, if you want to visit our website for more information, the link is www.principal.com.my.
Yeah. Until our next session, when you drink coffee, think of Principal for your investment.
Thank you.
Thank you.
Good night.
Good night.
Thanks, Jay.
Good night.
Thank you.
Bye-bye.